Picture this. One day you go to the casino, you had a really rough day. You're down a lot, and the stakes are really high. You sit down for one last hand of blackjack, and you pull two tens against a queen. Is it now time to double down and recoup your losses?
A lot of people are at these crossroads right now when it comes to Alibaba stock. So let's talk about what my overall opinions are when it comes to Alibaba. It trades under ticker symbol BABA. Now, real quick, if you did not know, this is huge news. Today, in the 13F filing, we saw that Charlie Munger, one of the greatest investors of all time, has been doubling down on his stake in Alibaba, or nearly doubling down. It states that in the third quarter, Charlie Munger purchased 136,740 shares of Alibaba, bringing his total position size to nearly 303,000 shares. But interesting enough, because how much Alibaba has fallen, his total position size, the net value of that position, has not increased by a lot. It was at $37 million. That was the total size of his position, and now it's worth $45 million. Now, $45 million might sound like a lot to you and me, but to Charlie Munger, this is chump change. He is super wealthy. There is a ton of money in that portfolio, and he has the luxury of being able to buy heavily in this dip, because right now Alibaba isn't that big of a position for him. So I don't know if he's just managing the position, buying more so that he can get out earlier if he pleases, or if he has really high conviction behind this trade and is going to start loading the boat even more. Time will tell. This is just one quarter, and when it comes to these kinds of investors, they make moves over many quarters. They dollar cost average just like the rest of us, but when we're dollar cost averaging, they're throwing millions of dollars at a single time. They are building their position up by the millions, and that's what they're doing right now with Alibaba.
A few moments later. So if we take a look at the charts, this is Thinkorswim. You get this for free when you sign up with TD Ameritrade. All you need to do is open up an account with them. I think it's a $5 minimum, and you'll get this software for free. It is hands down the best software for analyzing, trading, and investing in the stock market. Now, if we take a look at this chart, we're looking at the 1 year, 1 day chart. So each candle represents 1 day, and this whole frame is 1 year. If we take a look at this stock, we can see that it had a high of $319 back in October 27th of 2020. So basically in a year's time, we have cut the value by more than half because we're trading at $138.43. Well, that was the low. I'm sorry. We're trading at $143.14. So we're pretty much at the lows. There is one green candle here, so we did bounce a little bit, and that's today, because today everything started to bounce. But the overall trend is clearly downward on Alibaba stock. And when is it going to stop falling? I do not know. If we take a look at the 3 year, 1 week chart, we're pretty much getting close to this support here at around $130. Now, I want to see what Alibaba has done since it's been available to trade, since it's opened up its IPO. And interesting enough, it looks like this stock went public back in September of 2014 at a price of around $100 a share. We're right now at $143. So a 43% gain since its IPO back in 2014. If we take a look at this chart, there's clearly a support right here, a potential support, because I don't know if it's going to happen. And that can also correspond to right around here as well. And where we're floating at right now, there's not a clear support. We're kind of in no man's land. We're well below all the moving averages. This thing has dropped like a rock, and we are not at a support right now. We're nowhere near a support, in my personal opinion. If I was to get into Alibaba, I would wait to around $130. Looks like this support right here, the low, was $129.77. So I would look to get in at around $130 if I was going to trade this. If you're investing in this, then you need to take a look at the fundamentals, which we're going to do, and you need to make a decision for yourself if you think that Alibaba at $143 is worth it. Is the potential reward better than the potential risk? Is this potentially a good long-term investment? Now, what we're going to do right now is we're going to compare Alibaba to some of its competitors using MarketBeat. This is a really cool tool. We're going to compare Alibaba to Amazon because Alibaba is basically the Amazon of China. Everyone knows that. We're also going to take a look at Mercado Libre, which is the Amazon or the Alibaba of South America, of Latin America. And we'll take a look at Walmart because Walmart is a competitor. Even though they're not fully online and they have physical locations, Walmart provides a lot of goods to a lot of people. So they are a commerce giant as well. Now, we're not going to take a look at current price because that's irrelevant. Price does not matter. It's all about market cap. So let's take a look at some of this information. Let's just roll through everything that they have available to us. If you take a look at the analyst ratings, this is a trap. It is a buy with a consensus price target of $290.81, and it says that there's a 103.17% upside. The reason why I say this is a trap is because Alibaba has fallen so much that when these initial price targets were given, Alibaba was trading at a very different price. So as a firm, they could have said, well, there's 10% upside, so we're going to give a price target of $290. Well, that upside now is $103 because the stock has fallen so much. Big firms like this are not going to give price targets that are 103% to the upside because the odds of them being right are very slim. So they're going to have to adjust. This price target, the consensus price target, over time will eventually be adjusted, but that takes time because not all of these firms reiterate their price targets every single day, every single week, every single month, sometimes not even every single quarter. Sometimes it can be a whole year to another price target comes out. Now, we take a look at market cap. This is very interesting and this is good information. Right now, Alibaba is around $389 billion in market cap. Amazon is worth 1.63 trillion US dollars. Amazon is a giant. Mercado Libre is at $78 billion, so that is well less than Alibaba. And very interesting, Alibaba right now, even with that huge decline, is worth more than Walmart. I find this to be extremely interesting because I think Walmart actually might be a big play in e-commerce in the future. There's a lot of potential there. But moving on to sales and book value. The annual revenue, this is also very interesting. The annual revenue for Alibaba is $109 billion. It's $386 billion for Amazon. It's $3.97 billion for Mercado Libre. And it's almost $560 billion for Walmart. So Walmart is the third lowest in market cap at $380 billion, but the highest in annual revenue at $559 billion. The price to sales, the highest is Mercado Libre at 19.84. The higher the multiple means the higher the valuation. So the lower the multiple, the better. Obviously, right now, the price to sales is 0.68 for Walmart. And this is probably because Walmart is going to be growing the slowest out of all of these because it's well established. Next, let's talk about profitability. Let's take a look at the PE ratios, the price to earnings ratio. Now, let's take a look at the trailing and the forward PE ratio. Alibaba is at 17.5 for the trailing and 14.7 for the forward. That is far less than Amazon and is also far less than Walmart. So from a price to earnings perspective, Alibaba is considerably cheaper than Amazon and Walmart. Now, something else that's super important is growth. How the company is growing on the top and bottom line. Top line just means revenue. Bottom line means net income. Revenue is how much money the company is bringing in. Income is how much money they get to keep and they actually make at the end of the day. Now, if we take a look at revenue growth year over year for Alibaba, it's pretty damn good. It's at 40.24%. It's beating Amazon in revenue growth year over year. It's not beating Mercado Libre. Mercado Libre is growing at a massive 96.75%. But it's definitely beating Walmart. And that's why Walmart is trading at a lower price to sales multiple. It's also trading at a lower market cap, which might not be justified. Now, revenue over the last 3 years, Alibaba is also beating Amazon. Alibaba is seeing around 40%, Amazon at around 29%. Now, net income is a little bit of a different story. Amazon is beating Alibaba in net income, meaning that they are able to convert the top line, the revenue, into the bottom line, net income. The net income 3-year CAGR, which is compound annual growth rate for Alibaba, is around 37%. It's 67% for Amazon, and Walmart's doing a pretty good job itself at 25%. The reason why this says NM is because Mercado Libre is not profitable, therefore they do not have a net income, and this is not measurable.
So at the end of the day, when I look at Alibaba, I see some things that I like and I see some things that I don't like. Now, we didn't go over this in much detail, but you need to know that when you invest in Alibaba, you're not actually investing in the company. You're buying shares in a VIE, which is basically a trust that is in the Cayman Islands. So if things were to go awfully wrong, you have no rights to the actual assets of the business. Now, there are many debates going on right now in the stock market whether VIEs are too risky or not. But this is something that people already knew about. This is not a change in Alibaba. Now, what has changed is the way that the Chinese government has been behaving, and that is starting to scare a lot of investors. But at the end of the day, the question that you got to ask yourself, is it worth the risk? When you compare Alibaba to Amazon, and you take a look at that price to earnings ratio, forward looking, and you take a look at the revenue growth, even if the economy over in China was to slow down a little bit, it's still not going to be slow. A slower growth in the Chinese economy will still be decent growth, and this company can continue to grow at a great rate. So in my personal opinion, Alibaba will always be trading at a discount to Amazon, but the discount right now might be too much, and there might be too much FUD in the market when it comes to Chinese stock. So yes, Alibaba might be a good buying opportunity right now, but there are plenty of other great opportunities in the stock market. It's not just Alibaba, there are a ton of companies that you can invest in. So ultimately, you need to make the decision if you want to invest in Alibaba and take on the risk. For me, I do not like Chinese stocks. I made the personal decision not to invest in Chinese stocks. So I'm not going to be buying Alibaba. But there are many reasons to buy it if you're okay with that risk. And I would understand why somebody would take on that risk, because of the potential reward, if there was a decent rebound, is pretty good considering how much this stock has been beaten up. If you're going to trade it, then maybe you wait for it to hit that support and show signs of a rebound. When trading, it is very important to wait for confirmation. Wait for it to bounce, wait for it to break that first resistance, and actually show some strength. Don't try to catch a falling knife, because most of the time it's going to cut and it's going to burn. So hopefully I was able to provide you guys with some good value in this video. If I was, consider hitting that subscribe button, ringing that bell, and smashing that like button. Also consider joining the Patreon. It will give you access to a Discord server of over 500 investors where we talk stocks daily, and it will also provide you access to the weekly report where we let people know what stocks we're trading for the upcoming week. Take a look at the returns from just last week. They were massive in a market that was very red. That's because we take trades that are bearish, and that's because we took trades that were bearish, and we also took trades that were bullish. I'll catch you guys later. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya.